Hey, quick weekly market update for October 20th to 25, 2025. Here's what just happened. Stocks first, US equities bounced back after a choppy stretch. The S&P 500 rose 1.7% on the week, now up 14.5% YTD. The Dow added 1.6% this week, 10.0% year to date. The Nasdaq gained 2.1% this week, 18.0% year to date. Earnings season opened strong. Big banks beat on higher investment banking fees. Financials tracking about 18.2%. Q3 earnings growth versus 8.5% for the broader S&P. Globally, MSCI EF up 0.7% this week, 26.2% YTD. Emerging markets slipped 0.3% this week, still up 29.8% YTD. Communication services up 3.6%. Real estate up 3.6%. Tech up 2.1%. Financials were flat. Healthcare up 0.8%. Sentiment supported by expected Fed cuts. Sentiment supported by continuing AI enthusiasm. Forex, the dollar softened as traders priced in Fed easing and trade policy uncertainty. Euro up 0.8%, pound up 0.7%, yen up 1.3%, Swiss franc up 1.5%, Canada down 0.4%, Australia down 0.8%. For the year, the franc leads up 14.3% YTD. The euro is up 12.7% YTD. Even after the pullback, the dollar is still historically strong, but a softer dollar could help EMFX near term. Commodities by the Bloomberg Commodity Index rose 1.5% on the week, now up 10.6% YTD. Gold ripped up 5.4% to a record $43.92 per ounce. Gold is up 57.8% year to date. Investors chase safety amid higher yields and uncertainty. Oil went the other way. WTI down 1.9% to below 50 cent barrels, widening its 2025 loss to 9.4%. Brent remains among the weakest major assets this year. Crypto sentiment is rough. Bitcoin briefly dipped below 110,000, lowest in 3 months. Bitcoin is about 17% off the October 6th high above $126,000. Bitcoin and Ethereum ETFs saw $587 million in net outflows through October 15th. Fear and greed at 28, extreme fear. Correlations are neutral to gold. Correlations are weak to the S&P 500. Diversification remains, short-term appeal is limited. What's coming this week? Inflation is the big one before the Fed's November meeting. The US shutdown may delay some data. October 20th. Leading economic indicators forecast minus 0.3%. October 21, remarks from Fed Governor Christopher Waller. October 22, speech from Fed Governor Michael Barr. October 23rd, initial jobless claims, 240K forecast. October 23rd, existing home sales 4.08 million. October 23rd, testimony by Fed Vice Chair Michelle Bowman. October 24th, US CPI monthly, 0.4% forecast, annual 3.1%. October 24, core CPI monthly 0.3% and annual 3.1%. October 24, S&P flash PMIs. October 24th, final consumer sentiment 54.4. October 24th, new home sales 710K. October 24th, subject to shutdown delays. October 25, no major US events. Globally, watch China Q3 GDP seen at 4.7% year over year. China industrial production near 5%. China retail sales around 2.9%. Earnings to watch, October 24, Netflix after hours, subs and competition, Coca-Cola before hours, EPS 0.78, volumes and pricing, GE Aerospace before hours, EPS whole 147, demand and supply chains. Verizon, wireless ads and 5G, October 22, Tesla after hours, margins, EV demand, execution, Procter & Gamble, pricing power, AT&T, broadband and deleveraging. October 23rd. Ford, door down EV profitability and trucks. Intel, AI capex and chip recovery. General Motors, EV transition and demand. American Airlines, Southwest Airlines, Cleveland Cliffs, AGNC. Outlook, expect volatility. Earnings will drive the tape. CPI will drive the tape. Fed speak will drive the tape. Risks, US-China trade tensions, tariff threats up to 100%, shutdown disruptions, inflation spillovers. IMF sees 3.2% global GDP growth in 2025. US resilience could fade if demand was front-run by tariffs. The dollar may stay under pressure if fundamentals soften. Crypto could see more selling if fear sticks. Positioning, tactically overweight US equities, selective emerging markets on a softer dollar, defensive hedges in gold and Bitcoin, eyes also on China's GDP for global demand signals. That's your week. Follow for the next update.